Hi there, welcome to Kneppy Invest and welcome to Friday, the 21st of November 2025. Time is currently 2:57 p.m. So about 1 hour and 12 minutes left of trading today and also trading this week. A lot of times I get very happy or very excited about the end of Friday because I start looking at charts. Quite a few charts during the rest of Friday into Saturday, looking from some opportunity out there. So typically this time of the week, I get a little bit excited, even though the market is not open the next 2 days. Unfortunately, today it's been a pretty bad day on the market. Another period of volatility, extreme volatility the last 3 days. Down big, up big, down big. And funny enough, tech's had an okay, relatively speaking, day. In fact, when we have a look at the top gainers today, quite a few tech companies in that you would have thought might have been down. Mining's had a really bad day, almost down 4%. So, and small caps down 2.8%. Anyway, so what I'm going to do in today's video, we'll discuss why the market is down today, led lower by Wall Street. And then we'll have a look at a tweet. Interesting tweet because I've been umming and ahhing about why Wall Street dropped overnight. It didn't drop on open. In fact, it opened up 2%, finished down 2%. So a fair bit of volatility on Wall Street overnight. So what happened overnight that caused this volatility? And there are two possible reasons. One reason it has to do with the robust labor market in the United States. Some of that news flow came out during their trading day. The other one is what's happening in Japan right now. This is something I've been reading about for a few weeks, maybe even more than a few weeks. And there was an interesting tweet. I think this guy is being a little bit overly dramatic, but it is interesting what's happening in Japan right now. I don't know if that was directly why the market dropped. And I do think nothing to do with NVIDIA's results at all, even though there are some Twitter sphere people saying this had all to do with NVIDIA. No, NVIDIA opened up and it stayed up for about an hour, and then we started to see a lot of selling coming in. So something drove the selling, and it wasn't NVIDIA. It was something else. Maybe it was just bearish sentiment. Maybe that's all there is to help explain what happened overnight. So we'll have a look at that tweet, and then we'll go through the top, all the best and worst performing sectors, indices, and companies. Then we'll go through the top 5 stocks of the day. Now, last Friday had a shortage of companies that were worthy to be in the top 5. No problems today. It was an easy top 5 list. And we'll also have a look at the chart of the day. In fact, the chart of the day is a company that did not make it into the top 5. Unfortunately, the share price wasn't up all that much. I thought the share price would have actually gone up a little bit more. That's Reese. They did a trading update, and I thought it was actually quite good. Okay, so let's have a look at what happened overnight on Wall Street and into our market today. Now, I do have Japan 30-year bond yields up. This is a weekly chart. But what I'm going to do now is go to the NASDAQ. I was a little bit surprised when I woke up that NASDAQ was down a fair bit. In fact, it ended up down 2.38%. Now, this is the weekly chart. Weekly chart looks fine. Daily chart, even the daily chart looks okay. But I'm going to say possible, trend killer event. In fact, this might have been the second one or trend killer event we've seen, but the previous one, NASDAQ actually got higher. That was on the 10th of October, down 3.49% in one day. And then the NASDAQ rallied after that. So today, maybe it was a trend killer event, but NASDAQ did open up almost 2%. And then it went sideways for about, I'm just going to actually see what it opened up. Yeah, 1.85%. Then it went sideways and up a little bit over the next 1 hour and 15 minutes. And then it started dropping at about 1:45 a.m. local time or Brisbane time. So about 1 hour and 15 minutes after trading. So this was nothing to do with NVIDIA, the drop in the market. Nothing at all. Something spooked the market at this time. My first thoughts, because you just see it just nosedive. Now, this could be just a simple bit of remaining residual negative sentiment in the market, bit of bearishness. But I'm wondering if it has something to do with the labor market report that came out, better than expected. And I'm just wondering if that is what caused this, because the market wants interest rates to be cut for some reason, even though it's not necessarily a good thing having interest rates cuts. If the economy is tanking, moving into recession, that's actually a bad thing. In fact, we have seen over many, many years, there is a correlation sometimes between interest rates and the stock market. Sometimes you'll see interest rates actually dropping and the stock market absolutely plummet because it's a recession. And some other times you'll actually see interest rates rising at the same time the market's in a raging bull market. But we've seen over the past 5 years or so, the market has the belief that interest rates and the stock market should be inversely related. And we saw that between 2021, 2023, when interest rates were rising, the stock market came down, particularly tech companies. So it's now thinking the exact reverse. If interest rates, or if the market is going to go up, interest rates needs to be dropping. And with this robust labor market report, less chance of an interest rate cut by the Fed. That's possibly what has spooked the market. And spooked it enough that the NASDAQ actually dropped 4%, maybe 5% intraday. Nothing to do with NVIDIA, in my opinion. You wouldn't have seen this happen if it was just NVIDIA. You would have seen actually the market and NVIDIA open lower for the day, not higher for the day. So this was just intraday trading. But there's something else that's happening with Japan. And I really didn't give this much credence until I saw a few tweets about this. Now, I've been reading about this. Now, unfortunately, well, maybe not unfortunately, but Japan is highly indebted, and they've been able to handle the high indebtedness because of really low interest rates and very low inflation. So it hasn't really mattered that they're highly indebted. That's sort of the scenario we don't want to be in. I wouldn't say it's stagflation, or the complete opposite of stagflation, but very little growth, low inflation, low interest rates. But a couple of things have been happening over the last few months. And by the way, if you have maybe even more than that, have a look at Trading Economics. Japan inflation hits 3-month high. Yeah, 3-month high, so what? If it was 30-year high, I'd be more interested, but it's up to 3%. Now, Japan's annual inflation rate, I wonder if they got a little graph here. They should have a graph. I wonder if they can go back even further than... I'd love to see this go back many, many years, 5, 10 years. Yeah, so Japan's inflation has been really low. So this goes back 10 years. Maybe it can go back even more. No, it can't. So this goes back 10 years. In fact, a few times in 2018, 19, inflation got about 1%, but typically it's been between 0 and 1, and on occasion, it's actually been negative. Now, we started to see inflation rising in 2022, and it's remained steady. We haven't seen actually inflation fall back down, and we're starting to see inflation rise. So this is not something new if you just look in the last 3 or 4 years. But because of what's happening with inflation, interest rates are now rising. Now, I haven't really followed exactly what's been happening with the Bank of Japan, but this was a really interesting tweet from Shanaka Anslan Pereira. That's really, really long, probably a little bit too long. A lot of interest, 2.9 thousand hearts, 161 comments, 877, what's that, retweets? A lot of people have bookmarked this as well. Anyway, so I'm not going to go through this, all this, but I think he's being a little bit overly dramatic, saying global financial system just broke. Now, the reason he's being overly dramatic is because you get more hits if you're being really dramatic. Now, I could do that every single day, and I'd probably get more hits, more views, that sort of thing. He also mentions the bond yield hit 3.41%. Now, I was actually having a look at this. Here we go. Where is it? I've put it into my video technical. So here it is. So bond yields have been rising really, since 2022. So as soon as inflation started rising, we started to see interest rates rise. So I think what the Bank of Japan is doing, they have to raise interest rates because inflation is not falling. They really want inflation to fall, but they're having to raise interest rates. And this is one of the reasons why bond yields are rising up to 3.4%, the highest since 1999. So let's go through this. I'm going to go through this whole tweet. It's a way too long tweet. He must be a subscriber, because you can't write this long of a tweet unless you pay money to Twitter or whatever it's called these days, X. Anyway, so they are highly indebted. In fact, they mentioned here they owe 230% of everything it produces, the most indebted nation in human history. Probably, I'd like to verify that. Just because it's written here by Shanaka doesn't mean it's absolutely true, but I would imagine it is true. For 35 years, they kept the lights on by borrowing at near zero interest rates. So low inflation, low interest rates, that's great. That era ended this morning. So what's happening now is a lot of people getting really cheap debt from Japan because of really low interest rates, and a lot of Japanese institutions, fund managers have gone overseas or need to go overseas to get returns And that is sort of unwinding. That is sort of the gist of what Shanaka is talking about. So core inflation, 3%. For some reason, he's talking about military and Japanese spending on defense. I don't know why that's relevant. The Bank of Japan is trapped between two impossible choices. I'm not sure if it's impossible. Yeah, that's again being a little bit overly dramatic. Raise rates and trigger a debt collapse, or keep rates low and watch inflation destroy savings. They chose door number 2, but I think they are starting to raise rates. Or maybe they've well started to raise rates. Okay, so then he talks about how every major bank, hedge fund, institution on earth has borrowed yen at cheap rates. I think that's being a little bit overly dramatic as well. Not every single institution on earth has borrowed yen. I haven't. Suppose I'm not an institution, and invested elsewhere for 30 years. Yeah, this carry trade could be worth anywhere from 350 billion to 4 trillion. Well, that's a long, very massive range, isn't it? 350 billion to 4 trillion. Nobody knows the real number because it's hidden in derivatives. When Japan's system breaks, this money unwinds fast. Then he talks about what happened with the yen carry trade in July 2024, talking about how much government is going to pay interest on rising debt levels and rising interest rates. So every 0.5% increase in interest rates costs them 45 billion annually. At current yields, debt service will consume 10% of all tax revenue. That's the death spiral threshold. Again, a nice constructed tweet because he's really being overly dramatic and saying that's the death spiral threshold. Absolutely brilliant. It's also talking about the yen. And he's mentioned here, if the yen strengthens $152 to the dollar, the entire carry trade becomes unprofitable. Then the unwinding begins. And then for some reason, he says the emerging market currencies could drop 10 to 15%. The NASDAQ could drop 12 to 20% as funds are forced to sell. Well, it could. It could also rise. It could drop 40%. It could. Again, I think he's just using numbers to be a little bit overly dramatic. What happens next? Okay, so the Bank of Japan meets December 18, 19. Markets pricing in 51% odds they raise rates another 0.25%. If they do, volatility explodes. If they don't, inflation accelerates and the problem gets worse. There is no way out. Their fiscal dominance is now permanent. They must keep the yen weak to service their debt. This means the free money that powered global markets since 1990 is ending. The bottom line, interest rates worldwide are going up 0.5 to 1% permanently. I would push back on this. I wouldn't say permanently. And the reason I say this, I think there is a great chance, a really good chance that we're going to see a period of deflation because, in my opinion, this is just my opinion, eventually we're going to get to the point where energy is almost free. It's going to happen. I'm not sure what the time frame is. And this will be a deflationary event because we spend so much money on transport costs because energy prices are quite high. And you just think about it, this will happen because the way we get energy from the sun and from the earth, the sun and the earth doesn't charge us a cent for the energy. Coal companies charge us. All energy companies charge us to use coal, use gas, that sort of thing. The sun and earth doesn't. And eventually, as we become more efficient, as we become better at getting energy from the earth and sun, energy prices will drop to the point where it'll be almost free. Maybe not completely free, but almost free. And I think when this happens, it could unwind over a 5-year, 10-year period. We're going to see a deflationary event. And in my opinion, countries should be aiming to do this. Australia should be aiming to do this because those countries that really go hard at this will be the major beneficiaries. It's one of the reasons why Trump is his policies don't hold muster because he's not going down this direction. And I really wish Australian politicians will go down this direction, spend a lot of money researching. And I think eventually it's going to be private corporation who lead the charge for free energy. And you just think free energy will also mean food drops significantly. So food drops significantly, products drop significantly, prices. So a deflationary event. So I don't believe interest rates worldwide are going up 0.5 to 1% permanently. Permanently is forever. Not because inflation, because the world's largest credit nation can no longer subsidize global growth. Your mortgage, your car loan, your credit card, all are pricing higher. Yeah, stock valuations bid on cheap money or compressing. So this is not a recession. This is a regime change. The largest liquidity engine in financial history just seized up, and most people won't understand what happened until their portfolios are down 30%. Tokyo broke the world today. You'll feel it tomorrow. Anyway, I'm not sure I believe 100% in that, but it's not a possibility that this sort of is happening, and this could drive a bit of weakness in the market. But in saying that, we're seeing some good signs when it comes to the economy, United States and Australia. So I don't know if this is absolutely going to destroy economies around the world or whatever. Yeah, he does say this is not a recession. Anyway, so let's, I've gone on a really big tangent. Let's have a look at the ASX today. And we had a negative day. Again, not absolutely sure why. I can say with complete confidence, it was not because of NVIDIA. It was because labor market bullish, maybe this Japan thing happening, maybe that played a part too. Anyway, by the way, tech has rallied during the day. There you go. And by the way, some of the American futures are up. I think NASDAQ futures are up, Dow Jones futures are up, but they did drop a fair bit. So you would expect maybe a possibility of a bounce. Healthcare has actually had a good day. Staples a good day. So a bit of offensiveness in there. I've always tried to and ah about whether some of the healthcare companies are defensive, like ResMed, are probably erring on the, yes, they probably are defensive. And if they are defensive, these sort of companies should be what you pile into if you want a more defensive portfolio, not Woolworths, that sort of thing, because Woolworths is really expensive for what it does and what growth or lack of growth it has. Anyway, so staples, telecommunication, yeah, Telstra is defensive. Financials, not defensive, but they're down as well. And a really bad day for real estate, energy, and materials. Not sure why energy and materials, but really bad day for materials, down 4.16%. Gold down 5.25%. Well, that explains it. And small caps bad day as well, down 2.84. And that would be people getting out of more risky assets into safe haven, defensive. ASX 20 down 1.25%. So a lot of investors would assume that if you're in the ASX 20, you're safe. Yeah, I don't believe that. I think there's more that I think some of the smaller companies are safer than some of the bigger companies. Anyway, 4 companies are actually up, and I would assume all these are defensive. Maybe CSL, ResMed, Transurban, Telstra, Woolworths are up. Let's have a look. CSL, didn't expect Aristocrat, but it sort of makes sense because Text hasn't had a bad day. Commonwealth, Coles Group, that makes sense. Defensive. Woolworths and Telstra and Brambles, which may be defensive as well, all down a little bit. Worst performing companies, no shock here. Fortescue, Northern Star, Rio Tinto, BHP, and Goodman Group. Yeah, particularly those first 4 resource companies, and also Woodside, another bad day for that. Okay, now let's have a look at the top gainers today. A company called Ragusa, maybe it's Rag USA. Rag USA Minerals are 41.67%. I'll talk about the Star Entertainment Group in the top 5. There you go. And Metal Bank, that's on my small companies to trade list. Maybe I should look at the chart for that one, because I actually did put that down among a few. So it looks like it's had a bounce. They released something good the other day. Share price dropped, and now it's had a bit of a bounce, but fairly low turnover. Talk about Star Entertainment Group, and that's it. Loomis Diagnostics had a good day, which is not surprising because we've seen a lot of really weird, a lot of these more risky assets, what you might perceive as risky assets, have had a really good day. You can actually see that by the top gains by market cap. For instance, GQG Partners has fallen a fair bit. Now it's had a bounce. Catapult, Bravura, Cusco, Gentrack, all these companies have seen the share price drop a fair bit, maybe not Cusco, but and they've had a bounce today, which is again me thinking there's no way this was NVIDIA because these companies would have dropped a fair bit. Cettire, yeah, that's again another one. Cettire up. Okay, so let's have a look at Ragusa. Why is that company up 41%? Or what did I say? Rag USA. Looks like I have to log in. What was it again? Rag? Is it just Rag? No, it's RAS. Rag USA Mineral share price up 50% on company update. Now they released this at 10:43 a.m. So I'm assuming the share price did open up on and share price goes as high as 4%. So there has been a little bit of selling. Company update. Let's have a look at this. I did have a quick read of this and I moved on fairly quickly because I thought, oh, well, whatever. Progressing to completion of binding heads of agreement to acquire 60% controlling interest in a manganese gold project in Arizona, additional complementary new strategic mineral opportunities under review, and then a Bura Koppen project tenement relinquished. I didn't expect this would drive the share price higher. So maybe it isn't. Maybe it's nothing to do with his company update at all because there was nothing that exciting to me. But maybe I could be wrong. Maybe this is just a bit of trading going on. So let's have a look at Ragusa Minerals chart. And what we'll do is we'll zoom in. So share price had pulled back a fair bit, got as high as about 5.8 cents, 5.8 cents on the 16th of October. Share price has pulled back, and for some reason, massive volume coming through today. But there has been a little bit of selling, a lot of selling, in fact. I would prefer, when you see the share price pull back like this, I would prefer not a big rally the next day because you are going to see a fair bit of selling. And I can definitely understand why people are selling at 4.5 because you would have seen a lot of shareholders buy at above 5 and they saw the share price halve and they went, what a dog stock. As the share price rallies, I'm getting up. Now, the one thing I do like about this chart is the volume today. And we have seen a nice increase in volume. Now, the share price really broke out back in February, so it's taken a while for this to unwind. So Ragusa Minerals, I couldn't even tell you what the market cap of this company is. Let's have a look at percentage change. $6 million. There you go. This is a small company. Small company. And we'll have a look at Metal Bank later in the video and talk about Star as well. Top losers today. There's going to be quite a few companies I want to talk about in this top losers. Not Quick Fee. They did a couple return. I had a look. Why is share price down 45%? And then they are doing a couple return. And then my next question was, why are they doing a couple return? This company's not profitable. Why they sold something? They sold something, and the management went, well, the returns our shareholders can get from this money is better than what we can get, so we should give the money back. And for me, it should be the complete opposite. The management should know that they could get a better return from that money than shareholders, but they don't believe that. So for me, this is an uninvestable company just because of that. That's just me. Janus Electric Holdings, should I talk about that company? I'll talk about that company. I'll talk about Mayne Pharma, Mayne Pharma in the top 5 stocks. And there's a lot of lithium companies. Lithium must have had a bad day. There's Core Lithium, Global Lithium, European Lithium. And if you have a look at the top loser by market cap, there's a few companies here I will talk about. Not any lithium companies like Liontown, Iluka, which I think is rare earths. Or maybe, no, it's mineral sands. Silex is uranium. So lithium, uranium, bad day. And 2 other companies have had a bad day as well. Lovisa and Accent Group. Both companies down by more than 10%. They both had the AGM and released a trading update. Both companies are in the top 5, and no shock, coming in at number 1 and number 2. Okay, so let's just talk about Janus. So they were, or used to be called Renew Energy. Share price down 41.18%. On release of shares from escrow, reinstatement to quotation, they were put into suspension by the ASX because they did not release their annual report. And here we go, suspension from quotation on the 1st of October because they did not release the annual report. If you open up here, this is all the companies that did not release the annual report, including Janus Electric, also including DGL, which is still in trading halt because of that, or suspension because of that. So not many companies did not release their results or their whatever you call it. Anyway, so this is what can happen if you don't release your annual report and then all of a sudden you release it. Now, this company did a massive consolidation. If I can find it here, changed the name and did a massive consolidation. See if I can find it here. Janus Electric makes ASX debut, but here it is, change of name and ASX ticker, 9th of May. So maybe it's a completely different company. Oh, it is. I can actually see that completion of the acquisition of Janus Electric. So Renew Energy, whatever they're doing, was not working. They also did a massive capital consolidation, 200 for 1. And that means the share price has dropped a fair bit. So if it was 200 for 1, if the share price was 0.1, and the share price might have started trading at 20 cents. I don't know anything about this company, but this is what can happen if a company does not release their annual report. Share price down at 10 cents. Maybe it's an overreaction for the market. But if you have a look at the chart, I'm not going to have a look at trading view chart because it looks weird. Here we go. So the share price, when they went back to trading in May after the acquisition of Janus Electric, after Renew says whatever we're doing is not working, share price has gone down 67%. Anyway, so that's Janus Electric. I couldn't even tell you what they do. And by the way, the market cap of this company is 9.93. Says it's gone up 10,400% in 1 year. No, that's because of the consolidation. In fact, if it was a 200 to 1, it should be 20,000%. So yeah, the share price should be 20 cents on consolidation. So it's halved, but since it opened, it's actually gone down to 67%. So don't always believe this. There was a share consolidation that market index for some reason has ignored. Oh, what's this? 405. They got a wicket. Well, yes, I am watching we're not watching it. It's just got on my laptop. Not my laptop, my iPad. Anyway, and it should be lunch. And it is lunch, and that session has been won by the Aussies. That's the way it should be. Okay, so that's all I'm going to talk about when it comes to top gainers and top losers. Now on to the top 5 stocks of the day. Starting off with Mayne Pharma. What the heck has been happening to this company? Share price up a lot yesterday, down a lot on open. Yesterday it was up 20.88%. Today on open down 23.4%. Or 14%. And they went into a trading hold almost immediately at 10:18 a.m. Okay, so what's happening here? I'm not really following this company. In fact, if you have a look at the chart, it's just been all over the place. There is a takeover bid for Mayne Pharma. I knew that, and I was thinking, why does anyone want to take over this company? It's an absolute crap company. It's always been a crap company. And I'm going to talk about this a little bit more in a second. So there was a takeover bid. In fact, you can see this is when I see this sort of chart from the 21st of February through to the 4th of April, this is a telltale sign of a takeover bid. And the share price just pops up and just goes sideways, almost the same price. But maybe the takeover bid fell through. I don't really know, don't really care. And since then, it's been highly volatile. So maybe there's been a takeover war, or maybe I have no idea. But I was not that interested until I saw in Capital Brief. So I was not interested why the share price was down. Mayne Pharma tanks 23% after Chalmers. Is that the what's his name? Jim Chalmers. Is that Jim Chalmers? Yes, it is. Blocks Cosset buyout, enters trading hold. Well, what the hell's happening here? Why has Jim Treasure, that's the word, will block the buyout by Cosset Pharmaceuticals and so Jim Chalmers has accepted the very clear and ambiguous recommendation from or by Foreign Investment Review Board, FIRB, to block Cosset Pharmaceuticals' acquisition of Mayne Pharma on national interest grounds. I'd like to see why Mayne Pharma is important to our national interest, because I've always considered Mayne Pharma to be an absolute dog stock and not doing much. They manufacture drugs. What do you call them? The drugs that are like cost 5 cents. Generic, that's it. They manufacture generic drugs, and I wouldn't expect there to be much value in that, doing that sort of thing. And Mayne Pharma has been a disaster for many, many years. It's not the sort of company you'd say it's important to the Australian interest, but yeah, here's a chart. Going back to 2016, share price has dropped 90% since then. Anyway, so for some reason, Jim Chalmers and the FIRB thinks this company is maybe because Cosset said they were going to do something negative with the company, and I have no idea. So yesterday they did release at 6:46 p.m. after trading had finished, update on status of FIRB approval and second court hearing. There was nothing much in this, but the question I have is, if this information was known, why was there trading in the company's shares this morning? Why? Because obviously the market knew something. Share price down 23%. So why wasn't the shares in this company automatically put into a trading hold? I do have questions about this, and I want my questions answered. Because why? This should never have happened. So my main thing about this particular day for Mayne Pharma is why the shares weren't immediately put into trading hold, because obviously this information was out there. Otherwise, share price wouldn't have dropped 23%. And in fact, the share price opened near the high of the day. So if we have a look at trading today, what might have happened is, I'm just guessing here, what might have happened, or the share price started to fall almost immediately. Yeah, what might have happened is maybe the news came out just after opening of trade. Yeah, maybe AFR release. I don't know. Maybe the result. Maybe Jim Chalmers just released his news or his recommendation just after market had opened, and then someone should have told him, "No, don't release this now. Maybe you should tell the ASX or Mayne Pharma that they should be put into a hold." Maybe Jim Chalmers doesn't even think about that. I have no idea, but I do have a problem with what's happened with Mayne Pharma today, and I've always had the problem with the company itself. Okay, coming in at number 4, we have Star Entertainment Group. Talk about good news story here. I haven't really been following Star Entertainment Group for a while. Share price up 22.1%. And they released regulatory approval for strategic investment. So I have no idea what's been happening. They do release Appendix 4C, still burning through lots of cash. So they need funding. So if we have a look at the cash burn, so $44 million in operating cash burn and $55 million in free cash flow burn. $61 million in repayment of borrowings. They have a lot of debt, $611 million of debt. Anyway, so they need a lot of cash, or they need to stop the cash burn. Regulatory approval for strategic investment. So this must be cash. That's my first thoughts when I saw this. This must be a bit of a cash injection. So media releases made this morning by each of the New South Wales Independent Casino Commission and the Queensland Office of Liquor and Gaming Regulation in connection with its strategic investments in the Star by each of Bally's Corporation and Investment Holdings as trustee. Okay. So this has now provided the necessary regulatory approvals to permit the strategic investment to be implemented. This will now enable the conversion of Bally's and Investment Holdings' $300 million investment in the Star into equity and the subsequent appointment of nominee directors, etc., etc. This is, I definitely understand why the share price is up, because now the risk has dropped significantly because of this injection of $300 million. So the chairman, Ann Ward, says, this is a critical step in the Star's progress towards a return to suitability. I thought they were going to be sustainability and financial stability. We are looking forward to working with each to facilitate an orderly transition and to provide a pathway for the successful future of the Star. Now, they need more than this because it's still burning through a lot of cash, but this is all about risk, much lower risk in Star Entertainment Group right now. Definitely understand why the share price is high, but the risk is now not zero. It's just a little bit lower than it was. So let's have a look at the chart for Star. I haven't looked at this chart for a long time because there's nothing here to see. Is today, that's a minute chart, is today a breakout? No. For me, this is not a breakout. I still need to have a little bit more, not a breakout just yet. We've seen the share price of Star going a little bits of runs, short runs, and then pull away. Share price has been as low as 8 cents. So it's not that far from the low, but for me, this is nothing to be too excited just yet. But the risk profile of Star Entertainment Group is now lower, which is what the market likes. Okay, coming in at number 3, we have a small company called RLF AgTech. Share price up 6.67, was up by over 10% at one point. In fact, maybe even 20%. Yep, it was up about 25% at the high. So we have seen a fair bit of selling. We'll look at the chart in a second. Maybe we can understand why they're reselling. Australian Business Operations Trading Update. Now, let's have a look at the Appendix 4C first. They released this 1 month ago. Is this company profitable or generating cash flow? If it is, maybe it is. Maybe this company is one we should have a closer look at. I'm assuming this is an AgTech company because it's RLF AgTech, so agricultural tech, that sort of thing. Not sure what that entails. Lots of receipts, $5.4 million receipts, but operating cash flow are negative. So this would not be on my list of companies to have a closer look. Definitely not with that sort of operating cash flow burn and with that amount of receipts. Okay, so let's have a look at why the share price, why the market has been a little bit interested in this company. Not a lot, but a little bit interested. Not the sort of announcement that would get me overly excited personally, but their revenue up 34% higher the same period in 2024. Nice start, but I need to see that generating operating cash flow and free cash flow, or positive free cash flow and positive operating cash flow. I need to see that. Just because revenue is higher doesn't mean margins are higher. In fact, there's a chance maybe margins are lower and they have a greater cash burn. I don't know. Anyway, so that's all they're talking about, 34% higher for the first 4 months. But I need a little bit more. What do they do again? I forget. I think I've looked at this company in the past. Plant nutrition company that formulates and manufactures advanced crop nutrition products designed to improve agricultural productivity, crop quality, and soil health. Yes. Although if I went into an elevator right now, I could not give an elevator pitch, even though I just read what they do. So let's have a little chart for RLF AgTech. Is this chart to get excited? I'm thinking no, just because we have seen a fair bit of selling today, which probably means the share price. Oh, no, there you go. Well, the share price has dropped a fair bit recently. So we can definitely understand why there's been a bit of selling. So I do prefer, you can see the share price rallying back in July and then pulled back. And the share price didn't try for a V-shaped recovery. Share price went sideways for a while, about a month, and then we saw the rally. I do prefer that because that allows all those shareholders who bought high prices to get out of this dog stock. And don't forget, when shareholders, I'd say 90% of shareholders see the share price drop of a company they've bought, they automatically consider that company to be a dog stock. It's not their fault the share price has dropped. They didn't time it to, it's a company's fault. It's all the company's fault. It's a dog stock, I've got to get out. And I've heard this from colleagues in the past. Now, there are a few things to really like about this chart, particularly the volume. I really like the volume. Volume really started, if we go back, if we include 2024, share price in a well-defined downtrend through that year, found a bit of a floor at the start of this year, and then we started to see some volume coming in. So some people saw some value in this company at a share price between about 3 and 4 cents, and the share price has been gradually going up since then, and the volume has exploded over the past 3 or 4 months. I do like the volume. Do like the volume of this one, and maybe this is the low. Maybe the low has been reached at about 5.5, but we have seen a bit of selling coming in today for RLF AgTech. Okay, coming in at number, in fact, RLF AgTech was supposed to be coming in number 5. I put an arrow because I originally put in number 3, and then I put an arrow saying, it should be number 5. Doesn't really matter. Okay, coming in number 2, we have Lovisa. Lovisa. Share price down 13.93% on trading update. This was negative. Yeah, I'm a shareholder of this company, and this was negative. No, it looks positive, but it's actually negative, sort of. I'll tell you why in a second. They're opening up a lot of stores around the world, so the total sales growth is going to be pretty high, and it's 26.2%. But I do prefer comparable store sales, 3.5%. So that's for the first 20 weeks, 3.5%. Now, if we go back, I'm trying to remember when they released the most recent trading update, probably be in their results. And they did release a trading update with comparable store sales growth. And here we go, trading update. So just keep that number, 3.5%. Trading for the first 8 weeks saw comparable store sales for this period up 5.6%. So comparable store sales have gone from 5.6% down to 3.5%. Oh, so so trading has softened. That's probably the best way. Has softened recently for Lovisa, and the market, I think, picked up on that almost straight away. I saw that and went, ooh, I don't like that at all. So that's all that she really mentioned. They really mentioned nothing about why. I would have preferred why. Maybe a good reason why the comparable same-store sales has softened recently, and maybe they do expect it to pick up in the next month and a bit before Christmas. So definitely understand why the share price is down, and also it is valued quite highly. And this is the chart. And the chart looks negative as well. So when they released results in August, it was a nice little, I wouldn't say breakout, but it was a trend continuation. But it didn't really continue. So that enthusiasm for the results didn't continue. In fact, the share price started to drop a few weeks later and has continued to drop. You can just see here how short it is between a positive update to a negative update, and it could just shift sentiment quite quickly. And it looks like the market picked up on this. I think the market went, I don't think this comparable same-store sales growth is going to continue. Other than that, I do consider this company high quality. And if we have a look at the 200-week moving average, share price is still above that. And whenever the share price of this company drops to or below the 200-week moving average, great time to buy. But it's not there yet. It needs to go down to $26. Okay, and the stock of the day is Accent Group. The reason I put Accent Group as stock of the day is because I thought the share price will be down more, and it is just. Let's have a look. 13.75. Just. I thought this was worse than Lovisa. Maybe I'm a little bit biased. Share price down 13.58 on trading update. They also had the AGM, but it's a trading update. That's the important thing. Who cares about the AGM? All I care when it comes to AGMs are trading updates. That's the only thing that matters to me. I don't care about votes and addresses. I care about trading updates. Just give me trading updates. Okay, now to understand Accent Group's trading update, we need to go back to, again, their results in August, because they did provide a trading update. No, they provided some guidance, if I remember correctly. They provided some guidance, and this is very important. So they mentioned somewhere here, where is it? Oh, the third paragraph. The company is targeting high single-digit EBIT growth for financial year 26. Okay, high single-digit for EBIT. That's all they had another little sentence, but I won't talk about that. So EBIT for financial year 25 was 110.2 million. So they expect that to be, say it's 9%. We'll say 5%. 5%, we'll say 10%, 11. So they do expect EBIT to be close to $120 million. So keep that in mind. Expecting EBIT to be about $120 million, give or take a few. Now let's have a look at this particular trading update. And you can definitely see why the share price is down. And I think the market thought this was going to happen. For the first 20 weeks, total group earned sales up 3.7, like-for-like sales down at 0.4. So this is actually worse than Lovisa, but Lovisa's valuation is much higher than Accent Group. So the market is paying a little bit of a premium for Lovisa's bigger growth. For October, like-for-like sales are up 0.4%. Yeah, whatever. And the most important thing here is found at the bottom. Well, not in fact, found in the middle. For the full year, EBIT is expected to be in the range of 85 to 95 million. Whoa, hello. You were saying before, when you released your full-year results, you're expecting high single-digit growth on 110 million. Now you're expecting significant degrowth or dropping. That is actually a big downgrade. This is a big downgrade. This is a downgrade. So they're expecting EBIT to now be significantly lower than last year. So this is a downgrade for Accent Group. And to be honest with you, I might have expected share price to be down even lower, but I do think the market expected this. And you can see that just in the chart. Share price has dropped a lot. And even, I believe, I've been thinking, I wonder if there's any value in Accent Group, because the last time share price was this low was back during the COVID-19 panic. Now, there was AX1. There was a nice little comment from someone. Here he is, from VB Ad, who just mentions Accent Group. When you look at how they have restructured and operate their business now, there is no way they can ever make a decent profit. They've cancelled the franchise model and have purchased back all the independently owned shops. They sell shoes from individual shops next to each other in shopping centres, paying separate big rent and shop wages. Okay, so that's interesting. And there's quite a few comments in regards to that. But I still think there is a chance there could be some value in this one, because the share price has dropped a lot. And the valuation is not that, I mean, talking about a P ratio of maybe 11.86, but this is a downgrade. And just because this is a downgrade, there's no way I'm going to get in this. And this chart, this daily chart, looks horrendous for Accent Group. We have seen a little bit of buying. Share price drop below $100. No, not 100. Drop below $1. Very important level. So I would say there's a lot of investors out there going, "Oh, Accent Group, $1. I'm going to buy some shares in this company. Well, it's $1. Let's have a look at the 1 minute chart. Yeah, it fell below briefly. It fell below $1 briefly just after open, and there was almost an immediate rally. So some buying came in. Now, I would not be surprised if the share price of this company drops even further from here, because in my opinion, this was a really negative update from the company, because it's a pretty big downgrade. So that's Accent Group, the stock of the day. And I'm surprised the share price isn't down even more. Chart of the day, I'm going to look at two. The first one is Reese. Do we really need to talk about Reese? It's not a really good chart. Share price is up 2.14%. They did a trading update, and I was actually quite bullish about this trading update from Reese. But this is chart of the day. So just have a look at the chart. Is this time to think about getting in Reese? And just on the chart, no. Share price has been a well-defined downtrend. I think there might be some value in this now, maybe. Where's my mouse? My mouse has just disappeared. That is annoying, mouse. It's working. This does not happen all that often. I've got my mouse on my other screen, so I use the same, here we go. I use the same mouse for both screens, and I've never seen that happen before. Okay, so I remember looking at Reese or analyzing Reese probably 18 months ago when the share price was like $29, and I was thinking, gee, this is so overvalued. It's so richly valued. Share price has gone down almost 67% since then. And if I remember correctly, the P ratio was like 40. Why is it 40? There's well, there is growth, but the growth doesn't justify that valuation. P ratio now is 21.91. So I'm not even sure. Yeah, I don't know. Okay, and the other one was Metal Bank, because this was on my list of companies, small cap companies to have a look at. Oh, no, still, I do like the volume increase. The reason I'm like this one is the volume increase, these spikes in volume. Share price did drop a fair bit yesterday, down to 1.4. Now it's up to 1.9, but maybe. This is a maybe for me, just a maybe, just because of the volume increase. I do like volume increase. Okay, that is all we have for today's video, including my massive rant on that tweet. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.